negative, that is 3,000 rupees. So in case of the current liabilities decrease, then the last year it shows your cash flow is also decreases. The next current liability is increasing in this is the outstanding expenses. See the outstanding expenses, last year it was 12,000, current year is 24,000. So the reverse formula, if the current year current liability higher than the last year, it means it's increase, and in case of increase it's impacted positively. Increase in outstanding expenses. So it is increasing in outstanding expenses, it's increase the cash flow because of your amount has been saved sometimes, because of your outstanding expenses is increased which is not paid, and which is not paid, that means the cash flow is still with you, and that's why it shows a positive impact. The difference amount it comes to 12,000. Now we'll make a changes of all these 5 and identify the amount of all these 5. Adjusted profit, instead of the first column we would be going to write in the outer column. So 1,10,000 here. Now we will find out the difference of these 5 items. See the positive item 84,000 and 12,000, it comes to 96,000. Negative is 9, 3, 12, 12,600. So from 96,000, 12,600 is going to deduct the difference amount. We need to identify that 96,000 minus 12,600. So it comes to around 83,400. The changes it comes to 83,400, and this 83,400 would be added into this. So the total is comes to 1,93,400. The amount of changes 1,93,400, that is cash flow from operating activities. But still there is a one adjustment on under this category, and that is tax paid. So less tax paid, and that amount is 43,400 minus from it. So the balance it comes 1,50,000, and that is your answer A. Net cash flow from operating activity. Net cash flow from operating activity. So that is answer A. After the answer A, we would be moving for the question number 2, that is cash flow from investing activity. And we will identify the transaction under this. We have already 2 transactions we were sort out here. The shortlisted, according to the shortlisted, there are 2 things. One is a sale of building and another one is a purchase of building. Ultimately both are under this category. The changes of fixed assets are going to record under this investments activity. So the first is sale of building, and the sale of building comes to 18,000 rupees. So sale of building, so cash comes in. If it is cash comes in, it's always a positive impact. So the positive amount 18,000 rupees. And next is purchase of building. Purchase of building is always create the cash goes out. So it's negative on cash flow. It would be minus. So it is written in the bracket. If it is minus, it's always write down into bracket. So bracket it shows it is a negative amount, minus amount, which would be deducted from your activities balance. So 1,44,000 rupees, it's a negative amount. And just see where we were not prepared an account, but the observations from the balance sheet asset side, first asset is land. The last year land was 24,000, current year land is 48,000. It means it's increase. The land is increased, that means you bought some land in the business, and that amount goes out. So cash flow decreases. Purchase of land, and the purchase of land it comes to 24,000 rupees. So there are 3 changes so far under this investing activity. We don't have any amount of interest and dividend received. So only 3 changes are there under this investing activity. We will find out the balance. The total negative amount is, it comes to 1,68,000, and 18,000 is positive amount. So the balance is 1,50,000, and this balance is negative because of the negative amount is more, minus amount is more than the positive amount, and that's why the 1,50,000 rupees is going to return in the bracket. That is your answer B, net cash flow from investing activity. From investing activity. So this is your answer B. Now we'll move for the next. Third is cash flow from financing activity. So this is your last activity, cash flow from financing activity. Let's see what are the changes under this financing activity. Under this category, we need to find out and need to identify the changes under the capital structure. That means whether the ownership capital has been changed or a borrowing fund has been changed, if there is any payment of dividend or payment of any amount of interest, all these things would be considered under this activity. Now we'll see one by one. First you see the liability side, your share capital. The share capital last year is 1,80,000 and the current year is 2,20,000. It means it's increased. If the share capital is increased, that means cash comes in. How much is difference? It's 42,000. So cash comes in, it's positive. Issue share capital, and that is 42,000 rupees. Now another observation is the amount of dividend paid during the year. So the dividend paid during the year is 36,000 rupees, and that cash goes out. So dividend paid, it goes out, it's negative 36,000 rupees. Dividend paid 36,000 rupees during the year, it's negative impact and it would be deducted from it. So that's it. There are only two items under the category of financing activity. We'll just make a total and find out the balance. 42 is plus, 36 is minus, so balance outer column is plus, that is 6,000, and that is answer C, net cash flow from financing activity. Net cash flow from financing activity. So this is all about the answers of the three activities. Just we identified the answers of the three activities. So now we want to tally our answer whether it is right or wrong. So here I'm just going to rub it the few parts of this. This would be actually helpful to understand the remaining part of the portion. So you consider that these answers is continuing here. So this would be continuing here. Please you concentrate this. Now here, after we find out the answers of all these three activities, activity A, activity B and activity C, we will find out the net changes of cash flow in all activities. A plus B plus C. So now see first A. A is having a 1,50,000 rupees plus. B is having a 1,50,000 rupees minus. That means 150 plus minus is nullified. That's it. Then C is actually having a changes of 6,000 rupees positive. So ultimately your net cash flow from all activities or net changes of cash flow in all activities is ultimately 6,000 rupees positive, 6,000 rupees plus. Now how we can identify our answer whether it is a right or wrong. Now all of you see the balance sheet asset side, and balance sheet asset side see the cash balance, and cash balance opening and closing balance, and tell me the cash opening balance, it's very close to amount 30,000 rupees. Am I right? See all of you your question. The opening cash balance is 30,000 rupees. So in that case, after the 6,000 rupees of net changes of cash flow in all activities, added opening cash balance is 30,000. Your closing balance should be 36,000 rupees. Check it out in the balance sheet asset side. Your closing cash balance is 36,000 rupees. So closing cash balance 36,000, your answer is tally. As I already mentioned in the beginning of the part, if you're after adding a opening balance in the changes of all activities and the closing balance, whatever it comes, if it is tallied with your balance sheet answer, most probably your answer is right. I'm not saying it is 100% right, but most probably it is right, because of otherwise it would not be tallied. Here it is tallied, and that's why this answer is 100% correct, because of we were actually not missed out any entries so far as consideration of changes of cash flow. This is showing the net amount of changes in cash flow in the different activities, and this is a way to solve out the cash flow as per accounting standard 3. As we already discussed the first problem regarding the cash flow statement, I am taking another example. Question is, the balance sheet of a respected firm for 31st December 2008 and 2009 are given below. So that they were actually offered you a 2 consecutive years balance sheet. The years are 2008 and 2009. Few adjustments are given, net profit is given, but when the net profit is given, you just need to check whether the profitability is given in the balance sheet liability side or not. Yes, retained earnings is given, so opening and closing balance of adjusted P&L account is available here. Depreciation is another adjustments. Cash dividend declared, that is one more adjustment, and additional to the building was made during the year at cost price of 78,000. Fully depreciated equipment costing rupees 30,000 was discarded as no salvage being realized. So there are 2 adjustments. One is the adjustments regarding the building, and the another adjustments is regarding the equipments. Ultimately both are related to the fixed assets account. So on the basis of that, we need to identify the few accounts. One is fixed assets account, that we are going to draw it. Another is we are going to draw it, that is depreciation. Yes, depreciation. So fixed assets account 1, and accumulated depreciation account, that is your second account. That is the 2 accounts we identified. Anything else where it is required we will prepare. And the another important account is adjusted profit and loss account. So in short, the 3 accounts at present is identified, and we prepared these 3 accounts so far is concerned. Now we'll write down opening and closing balance of the same. Fixed assets we have 152 and 2 lakh rupees. So opening balance is 1,52,000 rupees, where the closing balance is 2 lakh rupees. Now see the accumulated depreciation account, the 60 and 40. So the opening depreciation account by balance brought down, that is 60,000, and closing balance account, it is 40,000 rupees. So this is opening and closing balance of the depreciation account. And now we can find out the opening and closing balance of adjusted profit and loss account, and that is given in the balance sheet liability side as a retained earnings. So retained earnings would be considered as a part of your opening and closing balance. By balance brought down, opening is given 70,250 and closing balance is given, that is 85,300. 85,300 rupees, it's your closing balance. Now let's move the adjustments one by one. Net profit, it's your first adjustment. Net profit is given 27,050, but we are already preparing adjusted profit and loss accounts, so net profit is at present not required. The depreciation charge is rupees 10,000. So depreciation charge rupees 10,000, which would be recorded, is always in a part of one is recorded in accumulated depreciation account, and other would be recorded in P&L adjustments account. So depreciation charge here, when you are going to charge, always it should be recorded in adjusted profit and loss account. So adjusted profit and loss account debited to accumulated depreciation account by P&L account 10,000 rupees and adjusted P&L account accumulated depreciation account 10,000 rupees. So that is your depreciation charge. Then the next adjustment is cash dividend declared during the period of rupees 12,000. When you are offering a cash dividend and that dividend is paid 12,000 rupees, it's always considered as a part. Listen, when dividend paid, So one is affected to your cash balance. Cash balance has been reduced. So that's one effect. It's already affected to the cash account and it is reduced. Another effect is you are going to record a dividend paid in the profit and loss account debit side. So it would be affected to your profit also, and profit is also goes down. Transaction 1 affect twice. So one effect would compulsory has to be reversed, and that's why we were try to reverse the dividend recorded in P&L account and added back into the profit. So dividend paid, we were already discussed this adjustment in the earlier problem also. If you remember, the dividend paid is amount rupees 12,000. So 12,000 rupees added back into profit. Now moving to the next adjustment is an addition to the building was made during the year at a cost of rupees 78,000. So 78,000 rupees of the fixed assets were purchased during an addition to the building. Addition to the building was made during the year at cost of rupees 78,000. So it's added. Added, it means purchase to bank account. Purchase 78,000 rupees. We make a star over here because of another entry would be recorded in the cash flow statement under the investment activity. So during the year they purchased this building. And another is fully depreciated equipment costing rupees 30,000 was discarded as no salvage being realized. 30,000 rupees of the fixed assets, it's completely discarded and no salvage value has been realized for the same. So that means we are not supposed to get any amount out of that particular assets. If you are not going to realize anything from that assets, that means the assets goes out, it's credit, and the amount, no salvage value, that means we are going to consider as a depreciation. So the journal entry is accumulated depreciation account debited to fixed assets account rupees 30,000. Because of it is completely depreciated, no value has been realized from it, and that's why it's considered as a depreciation and account and transfer into accumulated depreciation account. By accumulated